Welcome back to Arab Business, brought to you by Levant TV. Business in Egypt has expanded, marked by the first rise in staffing levels in nearly 2.5 years in September, with output and new orders rising sharply, according to a HSBC report. September data signaled a further improvement in the health of Egypt's non-oil private sector. Higher business requirements in turn encouraged companies to take on additional workers. Meanwhile, the inflationary pressures erased, with both input and output prices rising at weaker rates, the report explained. Markets Purchasing Managers Index of Egypt's service industry rose from 51.6 in August to a 10-month high of 52.4 in September. Private sector business activity in Lebanon continued to deteriorate at the end of the third quarter of 2014, but the rate of contraction erased in September compared to the previous month. The seasonally adjusted Blom Lebanon Purchasing Manager Index, compiled by data firm Market, remained below the critical 50 threshold for the 15th month in a row, but was up at 47.6 in September from 45.5 in August. Readings above 50 signal growth and an improvement in business conditions on the previous month, while readings below 50 signal contraction. The report said output levels at businesses and new orders fell solidly in September, albeit the rate of contraction was slower than August's 6-month record. Dubai developer Nakheel, famous for building the palm-shaped islands off Dubai's coast, reported a 47% increase in its 9-month net profit as revenue from new properties and retail business rose. Nakheel made a net profit of 2.60 billion dirhams in the first 9 months of the year, compared to 1.77 billion dirhams in the corresponding period of 2013. The developer's profit for the third quarter was 750 million dirhams against 570 in the prior year period. Earlier this year, it repaid all its outstanding pre-crisis bank debt worth 7.9 billion dirhams, as much as 4 years ahead of schedule. And Oman's central bank has set up a Sharia supervisory board to help oversee the Sultanate's Islamic banking industry, a centralized model that is increasingly being adopted across the global industry, but remains a rarity in the Gulf. Introduction of a central Sharia board could now speed up product development, limit costs for Islamic banks, and facilitate issues of Islamic bonds. Oman's finance ministry plans to issue 200 million riyals worth of sovereign Islamic bonds early next year, the government's first such issuance. The Islamic unit of Bank Muscat, Oman's largest lender, plans a dual currency Islamic bonds deal worth around $300 million as part of a 500 million riyal program, which the bank's shareholders approved in March. And finally, forecasts indicate the possibility of a dramatic growth in investments worth over 95 billion Saudi riyals in the Saudi tourism sector, hotels and apartments during the next 10 years. While Saudi nationals spend billions abroad during holidays, incoming foreign tourists, including pilgrims, contribute heavily to the growth of commercial business in the kingdom. And according to an economist, amid continuous improvements in the hospitality and related sectors in Saudi Arabia that also excelled in providing first-class services to its guests in terms of health services, security, and some other relevant hospitality services, the travel industry looks very promising. And for more updates, visit our website levant.tv. That was it for today. We will be back with you tomorrow for some more from the business world in the Middle East.